traders, Cousin Vinny coming to you from theclosingprint.com, December 6th, 2020. In this edition of your weekend video newsletter, we'll discuss the indices moving higher, many breaking out to fresh all-time highs, while international and emerging markets do the same. Big cap tech stocks and growth stocks are also breaking out and moving higher, confirmed by the bond stock ratio, which is also bullish, along with junk bonds and high yield corporate. Tick, cumulative, NAMO, the put call ratio, the dollar, bonds, gold and copper, the ratio, all pointing to a bullish breakout and continuation in the markets, despite what financial media pundits have been saying. The heat maps are mostly improving to bullish for the S&P 500 sectors as well as international markets. Most of our indicators are bullish, 16 to be exact, 3 are neutral, and 1 is bearish going into this week. For these reasons, we'll address many of these IBD 50, Market Smith Growth 250 stocks showing relative strength, stocks that funds are buying in green, and blue dot scan candidates in cyan, as well as the Dow Industrials, which are all moving higher, confirming institutions are buying voraciously. Bukowski has 4 of 5 green with a CPI signal green since November the 2nd at 91.8%. Bullish with 7 bearish patterns, 78 bullish, and 244 patterns waiting for breakout. We still have major resistance at 3,700 for the S&P 500 and 370 for the spiders to start the week, with support at 365 and 3650 respectively. First off, let's take a look at the spiders, which closed right at major open interest. Absolute gamma at 3,700, 370 for SPY is fairly large if you've been following the gamma channel. Updates during the weeks. That said, RSI is above 50 and rising, and we are in an area where there's very little supply as the markets have yet to trade at these all-time highs. Volume was above average for the most part, and we had MACD above its signal line and rising. Stochastics remains embedded like it did back over here in July. Not a reason to sell per se. It is a reason to start looking for some potential consolidation along the way as price action trends above the 5, 9, 21, and 50-day moving averages. The Nasdaq 100 also trading at all-time highs. RSI is above 50. On this weekly time frame, since the March lows, RSI has remained above 50 and continues to climb as we closed at the highs of the session on Friday. MACD is moving back above its signal line and volume increased substantially last week. Looking at a more broad measure of market participation with reference to the S&P 1500, which includes the 400 mid caps and the 600 small caps, with the latter outperforming, pushing this indicator even higher last week. Green is above red. We have a bullish signal, and the histogram is above the 2 trigger line, while Elder Impulse sticks continue to produce blue and green. No Bollinger Bands look like they're ready to open up to confirm over the next few weeks, and use these 1500 stocks as a reference point. With this particular 1500 stocks, we have the S&P 500 advanced decline percent cumulative for the S&P 500 in the upper panel, the mid cap 400 in the middle panel, and the small cap 600 in the lower panel. Notice all 3 are moving away from their 200 period moving average, with the small caps outperforming, producing a higher high, as well as mid caps, even though the S&P 500 closed at highs. All 3 are bullish. That said, the relative performance of the small caps is of note. From the March 23rd lows, we're up nearly 100%. to all-time highs. Again, in another chart, the small caps in the lower panel, transports in the middle panel, both outperforming and breaking out, signaling a follow-through in the S&P 500 as this relative performance perpetuates, further confirmed by the transports outperforming the defensive utility sector, the ratio in the middle panel breaking out above that September high, following through with a correlation between the transports and utilities telling us we have a strong positive correlation and one that forecasts further gains for the S&P and the US markets. If that were not enough, the S&P 500 in the upper panel, again, advanced decline percent breadth is improving as these lines move higher away from the zero line, but yet to reach the 30% line, telling us we're not overbought. Mid caps, small caps, and Nasdaq 100 in the lower panel, all confirming that we could see further upside in the weeks to come and still not be at exhaustion levels. In addition, NIMO, the McClellan oscillator for the 2,900 stocks, even broader measure of market participation, we see the black line continues to move higher. It could be reaching a peak short term, producing higher highs and higher lows, while the New York Stock Exchange advanced decline for those 2,900 stocks, preferreds, and mutual funds continues to make higher highs, while more stocks make new highs relative to new lows by 53% on Friday, outpacing what we saw on Thursday. All of this happening, of course, with more than $1.3 trillion worth of cash flowing back into the markets in recent months, as we can see in the Wilshire 5000, breaking out to fresh all-time highs as well, up nearly 80% from its March low, breaking out of a weekly consolidation zone that took about 10 to 12 weeks, volume increasing and cycles improving and turning back to the bullish direction. That said, the one bearish indicator we have going into the week is the VIX. It's basically bearish to neutral. We could see volatility pick up again as the signal remains near neutral at best, with the VIX continuing its daily pattern of lower lows and lower highs. Last week, we started to level off and move sideways with stochastic RSI oversold, trying to start a trend higher. Mean reversion wouldn't be surprising. A move back towards the 27 level provided some catalyst unforeseen at this moment in time, while safe havens like gold and bonds showing a lack of interest by institutions and investors. We had the VIX VXV ratio continuing to move lower as well until it gets into the red zone. This is still bullish for equities to start the second week of December trading. The bond stock ratio between the 10-year and the S&P 500 is dropping. That's bullish for equities. And with the 10-year bond moving lower, the 10-year yield, the opposite of course, is moving higher. That's bullish for equities. Each of these vertical lines, inflection points where the 10-year yield started to rise, led to a bullish follow-through in the S&P 500 back in 2012. That was a 66% gain on the breakout. And in 2017-18, we had a 37% gain. This time around, we're more than 60% and continuing higher as the 10-year yield is approaching 1%, with momentum clearly bullish in the upper panel. Also confirmed with HYG and JNK for investors looking for more than 1% on the 10-year. They'll flock to the HYG high yield corporate and junk bond markets, which is also a bullish risk-on indicator for equities. In addition, we saw the US dollar remain in this downtrend over the last several months, bullish for emerging markets and European markets as well as Asian markets, and commodities like copper and crude oil. Not so much for gold, which tends to be a safe haven asset, showing a lack of interest by institutions and investors as RSI remains below 50 and price action remains below a descending 50-period moving average. Gold is showing a lack of interest, though it did bounce last week. With copper resuming its bullish trend, the ratio between the two, of course, shows a direct relationship and correlation to the S&P 500. When markets are moving sideways or in turmoil, gold tends to outperform. When the economies are improving, copper tends to outperform and rally, which we can see in the S&P 500 during these areas where copper outperformed gold. During the periods where copper underperformed, we can see how the markets were moving sideways and gold outperformed during periods of uncertainty. Finally, the correlation between copper, gold, and the S&P 500 telling us to be bullish equities in the short term. Sectors are improving. Here is the Nasdaq Biotech Etf IBB breaking out to 52-week highs. Real estate moving higher, pushing away from the 9 and 21 day with potential to the upside. RSI above 50. Transports, as previously mentioned, outperforming utility stocks, that ratio giving us a bullish indication. Materials near highs, showing a potential for a breakout. Communications flagging at highs. Energy with good relative performance coming off of 52-week lows at the end of October, showing signs of a continuation in the rally. So make sure you check out the oil and gas equipment and exploration companies that we mentioned last week, where a dozen of them moved higher, more than 10-12%. Financials improving. Industrials just off of 52-week highs, RSI above 50. Look for more follow-through in the likes of Caterpillar, 3M, Boeing, John Deere, among others. Technology also looking like a multi-top breakout, following through, closing at highs on Friday. Consumer staples also towing the line, moving higher, bouncing off the 21-day on Monday, following through during the week. Thursday bounced back above the 9 EMA and looks like it's going to rally to highs. RSI is above 50. Utilities, the one defensive sector, breaking down below the 9, 21-day, and 50-day in a bearish trend. RSI is below 50, so respect the trend. Bounces will most likely get rejected. Those are potential shorts. While healthcare continues to perform off of 52-week highs, so we could see some relative performance without being overbought in healthcare stocks, biotechs, with RSI above 50 and trending. And consumer discretionary, which have been consolidating for the last 7 to 10 trading days, looking for this to move higher into the holidays as consumers spend more. They're traveling less, putting more money in their wallets for the holidays, which translates into retail stocks, XRT, moving higher. The relative performance between XLY and XLP, of course, continues its bullish trend. That's telling you that institutions are bullish equities. They are not defensive. This looks nothing like 2018 or 2019. After rolling over, this looks nothing like February. International markets also look good for areas to put money to work. Argentina, Chile, emerging markets, all of these moving above their 21-day, the blue line, and the 50-day, the red line. Ireland, Australia, Sweden, Canada, all of these trading near highs. Germany, Italy, on the prospects of vaccines perhaps, Nonetheless, they're moving higher. Japan, Switzerland, the Netherlands, Spain, France, Singapore, the UK, trading near highs, Taiwan breaking out, Mexico, South Korea, Brazil, with China moving sideways to flat, and Greece with the greatest outperformance, following through trading at 52-week highs. This week we tried to focus on the IBD 50 stocks, all of these with stochastics oversold, MACD trending, and RSI above 50. We're trying to find the best of the best, with stocks like ATVI, gaming, pushing back above the 50-day moving average, volume picking up, MACD above its signal line. The only caveat is that stochastics is above 80. It is turning back up. Price action most likely will follow through this week. Adobe also above the 50-day. These wicks on Thursday and Friday's candles suggesting there's some sellers just north of 490. So if we can manage to pop through that area, we'd test 502 and then perhaps 519, 520. RSI is supportive. It's above 50. Volume has suggested institutions have been picking up shares over the last 2 weeks. MACD is above its signal line. Again, stochastics not in the absolute best location, oversold and starting to turn, but we are above the 921 and 50-day. AMD dipping to the 9 EMA, buyers promptly jumping in to shares, RSI is above 50. Volume increased on Friday. MACD is still above its signal line, and stochastics embedded above 80. Amazon showing underperformance, RSI back to 50. Watch how it handles the 9, 21, and 50-day this week. Applied Materials, while showing voracious appetites, confirming that institutions are bullish equities. Some of the pharmaceutical names also looking good. Watch for Bristol Myers Squibb, Merck, Johnson & Johnson, all to move back above their 9 and 21 day. We'd like to see a follow-through. RSI remain above 50. Cadence Design, CDNS, a previous mention, moving off the 9 EMA. 3 white soldiers looking for a follow-through and a test of 127.50, as RSI suggests more upside. In addition to volume, which increased on Wednesday, Thursday, Friday, MACD crossed and stochastics continue rising. Currents, CRNC, bouncing off the 921 day, looking for a follow-through this week. Volume picking up over the last 3 weeks. MACD is above its signal line. Watch stochastic and RSI, looking for a test of 52-week highs. Crocs, as you'll recall, retail is outperforming. That sector is rising and bullish. The trend in Crocs has yet to be broken. Continues higher. If you're still in this from previous watch lists, looks good as institutions continue adding on dips to the 9 and 21 day. Danaher, I know some of you were trading this last week. I believe Mikey was mentioning it as well. RSI is rising through 50. Look for the price action on this higher low to give us a higher high, a move, and a close above the 921 and 50-day. Watch this volume by price band as resistance. Stochastics and RSI, along with MACD, all giving us the indication we might see a follow-through. Volume picked up to begin the week. Looking for a follow-through this week and a move back and a close above the 921 and 50-day or confirmation. Apps Turbine doing its best to hold the 9 EMA. 21-day was tested on Wednesday. Look for a follow-through, RSI above 50. MACD is above its signal line. Starting to look like spaghetti down here on stochastics, so we need to see a breakout in the short term to stay bullish on Digital Turbine. Dynatrace, a good example. Stocks moving through the 9 and 21 day, 50-day close. Last week, RSI is above 50. Look for a follow-through and move above this volume by price band. Resumption of the trend. MACD is above its signal line, rising through 0, and stochastics above 80. Integris, some of you were trading this one from previous watch lists, following through, breaking out the 52-week highs last week. MACD above its signal line, volume increasing, and stochastics embedded. Etsy, potential this week. We were looking for a flag, a consolidation on the breakout to 52-week highs last week. So this is a stock we'll keep an eye on this week. Floor and Decor in the construction-related industry groups outperforming, closing above all moving averages, RSI above 50, looking for a follow-through, stochastics pointing higher. Whole Logic, nice 3-candle reversal, 3 white soldiers following through off the 50-day moving average, volume picking up, RSI above 50, MACD crossing, stochastics rising, looks like a follow-through this week. Horizon Therapeutics, a little bit of selling above 72.73. Looking for a follow through this week. RSI rising. Healthcare improving. Stochastics pointing to higher highs and higher lows. With MACD crossing on above average volume, look for a move back above the 50-day moving average this week. IIPR in the cannabis warehouse leasing industry group, looking for a follow-through. Real estate was outperforming last week, if you recall the sector analysis. Looking for a follow-through, volume picking up on Friday. Look for a turn this week. Lam Research and semiconductors outperforming last week. You remember what happened with Intel, AMD, and Nvidia, along with the likes of Micron. Logitech from last week's watch list, looking for a bounce off the 21-day and a follow-through, a good buy point. Looking for a bounce on Monday. Stochastics turn back up. Monster Beverage looking for a follow-through. People shopping during the holidays. They'll be buying more beverages as they're out. RSI rising. Price action testing 52-week highs again. Volume increasing. MACD above its signal line and rising. National Beverage trending. RSI embedded. Volume increasing, showing institutions have been picking up shares. MACD above its signal line. Nvidia along with AMD trading at volume by price, looking for a push off the 50-day sometime in the short term. RSI MACD suggesting we keep an eye on it. Palo Alto Networks and other security stocks breaking out last week, volume increasing 3 weeks ago, signaling this gap and go would follow through. RSI is embedded, showing muscle. MACD is above its signal line, and volume on Thursday and Friday was awesome. PayPal, the payment processor stocks most likely will follow through. Square looking for a follow through as well. With those two most likely outperforming with Bitcoin and blockchain technology. PKI, if you're still in this one, just bring your stop underneath 137.50. Tighten it a bit. Looking for a follow through. RSI suggests more upside. Volume increasing, showing institutions are present. MACD above its signal line. RBA from previous watch lists had a nice gain over the last couple of weeks, starting to falter a little bit. If it doesn't follow through this week, we'll probably take that off or reduce our position size. SWBI, sideways range since September, looking for a follow through. RSI to move above 50. Price action to close above the 921 and 50-day this week. RSI volume suggests we might see that picking up on Friday. Stochastics turning, MACD crossing. Synopsis from previous watch lists, follow through breakout, just bring your stop up underneath this area here, looking for a follow through. Volume increasing, MACD crossing. T. Rowe Price, mutual funds, we have MACD above its signal line, volume increasing, and T. Rowe Price breaking out. As millennials start investing in their 401ks, new positions, new jobs, out of college. Taiwan Semiconductor, recent entry, an ad for some of you, looking for the breakout to continue. RSI is rising. Looking for semiconductors to follow through this week. MACD is above its signal line. Stochastics turning up on above average volume on Friday. Trade desk looking for a follow through, breakout. If you listen to anything that Kathy had to say over at ARK Invest, this self-service platform for ad buyers, advertising is going to be a big deal going forward in the new digital age. And Trade Desk is right in the middle of it. In addition to the stocks that we reviewed from the IBD 50 that we like for the week ahead, we also looked at some stock ideas from MarketSmith with the blue dot scan showing 7 candidates potentially for this week ahead. Shack being one of them, breaking out on this weekly time frame and the daily last week, looking for a follow through. In addition to these 7 stocks that showed up on the blue dot scan on Friday. Okay traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, December the 6th, 2020, with your weekend video newsletter. Make sure to check out the rest of these stocks listed below for the week ahead. I'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. Be sure to check your inbox for that or the watch list channel on Slack. Otherwise, have a great weekend, take care, and we'll talk to you soon.